Iraq's economy is facing a critical juncture, grappling with the challenges of dollar dependency, inflation, and a weakening currency. The dominance of the US dollar in Iraq's financial system has created a complex web of economic vulnerabilities. This reliance on the dollar exposes Iraq to fluctuations in US monetary policy and exchange rates, over which it has little control. The recent decision by the Central Bank of Iraq to halt the use of the Chinese yuan in its transactions, reportedly under pressure from the US Federal Reserve, further highlights this dependence. While the Iraqi government has engaged in discussions with US authorities to address the situation, the outcome remains uncertain. This dependence on the dollar has significant implications for Iraq's economic stability. It can lead to higher import costs, fueling inflation and eroding the purchasing power of Iraqi citizens. Furthermore, it limits the Central Bank of Iraq's ability to effectively manage its own monetary policy and respond to domestic economic challenges. The Iraqi dinar has experienced a steady decline in value against the US dollar in recent years. This depreciation is driven by the country's heavy reliance on oil imports and political instability. A weaker dinar makes imported goods more expensive, contributing to inflation. The government's ability to control inflation is hampered by its dependence on the US dollar. The weakening dinar discourages foreign investment and hinders economic growth. Iraq's economy remains heavily reliant on oil exports, which account for the vast majority of its foreign exchange earnings. This dependency leaves Iraq vulnerable to fluctuations in global oil prices. It leads to a lack of diversification, making the economy susceptible to shocks in the oil market. The reliance on oil contributes to the flight of foreign currency. This depletes foreign exchange reserves and limits Iraq's ability to finance imports. Section 4. Policy shortcomings, a critique of Iraq's economic management. The Iraqi government's economic policies have been insufficient in addressing the country's deep-seated economic challenges. While some efforts have been made to promote diversification and attract foreign investment, these initiatives have been hampered by corruption, bureaucratic inefficiencies, and a lack of political will. One of the main criticisms leveled at the government is its failure to implement meaningful structural reforms. Addressing issues such as corruption, improving governance, and creating a more business-friendly environment are crucial for attracting foreign investment and fostering sustainable economic growth. Moreover, the government's over-reliance on oil revenues has discouraged it from diversifying the economy and developing other sectors. Breaking free from the shackles of oil dependency requires a comprehensive and long-term strategy that prioritizes investment in education, healthcare, infrastructure, and other key sectors. Section 5. Structural reforms, a path to sustainable economic growth. To achieve long-term economic stability and prosperity, Iraq must embark on a path of deep and comprehensive structural reforms. These reforms should aim to address the root causes of the country's economic woes, including its dependence on oil, corruption, and a lack of diversification. One of the most pressing priorities is to reduce Iraq's reliance on oil exports. This can be achieved by investing in renewable energy sources, promoting energy efficiency, and developing downstream industries that add value to Iraq's oil resources. Diversifying the economy into other sectors such as agriculture, manufacturing, and tourism is also essential. Addressing corruption and improving governance are crucial for creating a more attractive investment climate. This includes strengthening institutions, promoting transparency and accountability, and tackling bribery and nepotism. A more business-friendly environment will encourage both domestic and foreign investment, leading to job creation and economic growth. Section 6. Charting a new course, recommendations for long-term stability. Iraq must adopt a multifaceted approach to achieve long-term economic stability and prosperity. This includes sound macroeconomic management, structural reforms, and good governance. The central bank should have greater independence to manage monetary policy. Moving to a flexible exchange rate regime could provide more autonomy. The government should prioritize fiscal discipline and reduce reliance on oil revenues. Broadening the tax base and rationalizing spending are key steps. Investing in education, healthcare, and infrastructure is crucial. Tackling corruption and improving governance are essential. Addressing these challenges can build a brighter future for Iraq.